I have blown accounts trying every setup you can think of. Breaker block, mitigation block, liquidity grab, you can name it. But there's one particular setup that I will trust with my real money every single time. And it's not what you think, okay? It's not what you think. This setup is not about indicators, no guessing, but just price telling me what exactly am I going to do in the market. Now, looking at the chart, you can see this is Euro gold. This trade was being caught, I think, a few days ago in my community. I'm going to teach you guys how I was able to catch this particular trade step by step. Trust me, you are going to learn a lot. I've been saying this in all my video. You are going to learn a lot. If only you can calm yourself down and watch this video bit by bit. Now, how does this setup form? Which strategy involve, or which strategy owns this setup? This is called the candle range theory strategy, and it is very simple. Candle range is very simple. All you need to do is just, for you to trade the candle range theory, just wait for a particular consolidation. This will be your consolidation. Then you wait for the liquidity sweep. Yeah, and after the liquidity sweep, then you wait for your expansion. Yeah, man, this is just this thing that I drew here now is called what? Candle range theory. As easy as that. Don't need anything to tell you otherwise. Do you understand? So now, how was I able to cut this particular clean setup? Now there are only three rules here. Only three rules. First of all, we are using our 4-hour time frame for what? For our consolidation confirmation, where we are going to mark the high and low of a particular 4-hour candlestick. Then we are using our 15-minute time frame to mark out any candlestick that purges the liquidity neither to the upside or to the downside. That is when we are going to be using our 15-minute time frame. Then we are also going to be using our 15-minute time frame to as a model 1 entry. You understand? As a model 1 entry. So let's start. Let's go to our 4-hour time frame so you can see this very well and very clearly. This is our 4-hour time frame on gold, and as you can see, don't forget that key level is key in CRT. Your CRT must be able to form inside a key level for that CRT to be valid. Okay, so this is a bearish candlestick. This was 11 p.m. candlestick on Wednesday. What I did was I marked the high of the candlestick, and I also marked the low of that particular candlestick, which is this, and I waited for price to sweep neither below or above it. Remember the rules. If price sweep below of this candlestick, we are going up, and if price sweep above of it, we are doing what? We are going down. It's very simple. All you need to do is just wait for that particular candlestick that causes that particular sweep in the 15-minute time frame. That candlestick is going to be our model 1 entry. Then we'll strike from there, as easy as ABCD. So now, what is our key level? I've been talking about key level. What is our key level? This is our rejection block. This is our rejection block. All these are liquidity residing there. This is our this is our other block, old other block. You can see it. Price rejected it from here. Rejected this other block, showing that this is a valid order block. Okay, all these are valid order block, and this is a liquidity pool. Let me show you something again. Or let's say this is a liquidity void, and no matter what in a liquidity void, the price will do what? Must take over the 50% of it. So after seeing this liquidity void, what are you expecting? You're expecting that price is going to go up. It is a sure. Price will surely go up. Then all you need to do is position yourself in a candle range theory pattern way that can be able to take you up to this particular side. You understand? So after getting this particular sweep to the downside, this was the sweep that we got to the downside. How was our entry created? So now we go down to our 15-minute time frame and we wait. this was the low, and this was the candlestick that causes that particular sweep. You can see this particular candlestick, this causes that particular sweep. Okay, then we mark out the eye of that candlestick. The eye of that candlestick is going to serve as our model 1 if only there was a break above it and a closure. That would be a valid model 1. But if there's no break above it and there's no closure, that is not a valid confirmation. It's not a valid model 1. You leave it. Okay, we leave it for next time. So now, in this particular scenario here, there was a break above and there was a closure. Then this particular model 1 or confirmation is valid. Then all you need to do is wait for a price to retrace and tap us in this particular model 1, and before going to the next draw in liquidity. This is the draw in liquidity here, because all of a sudden price starts falling from this particular side and starts falling to the downside, making here a valid draw in liquidity. And I've said that before in my previous video. Any liquidity pool, price must surely sweep the, or take over at least the 50% of it. Do you understand? You need to understand. Okay guys, so you can see it. After price tapped us in, price start moving straight to where? To our TP. As easy as that. This strategy is very simple and easy. If you want me to elaborate more on this strategy by teaching you, I'm just showing you the market breakdown. But if you want me to teach you how everything about candle rate theory from number 1 to below, I'm there for you. Okay, I'm there for you and I'm going to teach you that. Do you understand? So now, but sometimes this strategy does not, this strategy has a win rate of at least 80 to 70%. No strategy is 100%. Okay, let me show you something, what I mean by that. This is $0 USD trade. This trade just took us out. You can see this trade took us out just now. It's a clean setup. What did we do wrong? Some people might be saying we did not wait for price to take this other block. Listen, you're not going to see something like this before you enter any trade. You're going to only see it after the trade. Then you start forcing reason to show that this particular setup failed. You start forcing reason. So this setup failed because of this and this and that. No, don't force any reason. Okay, do not force any reason. Leave it like that. Build a system. And leave the system like that. This was the trade we took yesterday, as clean as that. You can see this is our liquidity sweep here. Price set the liquidity and price did the what? Price closes above that particular candlestick that causes that liquidity. Price closes above it and give us our entry. And also this is also a liquidity. This is also liquidity. This is also liquidity sweep. Okay, this is also liquidity sweep, and price did what? Price tapped us off in from here and boom, boom to the upside. As easy as that. So this particular strategy worked here, but all of a sudden it failed here. Okay, now let's analyze this and know if we are in the safer side or we are not in the safer side. Now in the daily time frame, no, in the 4-hour time frame, this was our daily, our 4-hour high and our 4-hour low. Yes, our 4-hour high and our 4-hour low. Price did what? Price swept that particular low first of all. Price swept this particular low first of all and gave us a valid model 1 entry. Yeah, this is a valid model 1 entry because price already break above this and closes and giving us a valid model 1 entry. So, but we entered in this particular place. We entered here, and even at that we got all this correctly. Price did what? Price took us to what? To SL. Are we going to re-enter this particular trade? No, we're not entering anything twice. Okay, we're not, because price is in this other block does not mean that we should go and start buying again. No, we're not doing that. If eventually this moves straight to my TP, no problem, so be it. Do you understand? We don't overtrade here, we don't revenge trade, we don't do that shit here. Okay, we don't do that here. Now this also shows a change of direction from the market. Change of direction from the market, I think so. So Where are we heading to? Is there any fair value gap over here? Is it valid fair value gap over here? Is there any valid order block? Okay, this is a value gap. This fair value gap will serve as our entry. You can see the formation here. You can see it. This fair value gap will serve as our entry. Before, okay. After that, what next? Nothing. Nothing. We're going to wait. Okay. We're going to wait for this candlestick to close. Then the next candlestick is going to determine where we are going. These are rejection block over here. The next candlestick is going to determine where we are going to be going. Do you understand? Yes. I hope you understand and learn a lot from this particular video. So, judging from the new formation of the market, you can see we just need to mark the high and the low of this particular candlestick. Then we go down to our 15-minute candlestick and wait, or we mark out that particular candlestick that causes that particular purge. This is it, and this is the candlestick that causes this particular liquidity sweep. You can see it, guys. This is the candlestick. Then we mark the high of that candlestick like this. And what are we waiting for price to do? We're waiting for price to give us something like this. Our drawing liquidity should be here. Okay, so we're waiting for price to give us something like this. From here, price closes above this place, making this particular model 1 confirmation entry valid. Price will now tap us in from there and boom to the upside. This is what we're waiting for from the market. Okay, see you guys in the next video. Don't subscribe to like, share and follow.